in 1 to 3 years, what is happening with the BRIC nations will rival the input that the change in the Industrial Revolution had for the United States, only this time in the opposite direction. It's a negative. America is going to be outside looking in at a time when it can ill afford to be outside.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Peter Grandich joins us today. Peter entered Wall Street back in the mid 1980s with neither formal education nor training, and within 3 short years was appointed head of investment strategy for a leading New York Stock Exchange member firm. Peter would go on to hold positions as chief market strategist, portfolio manager for 4 hedge funds, and a mutual fund that bore his name. Peter has been featured on Good Morning America, Fox News, CNBC, with dozens more, to name a few. And we're delighted to have Peter join us once again today. It's time to saddle up and silver up for Peter Grandich. Peter, welcome back to SBTV. How are you doing?
Very well, thank you, and really looking forward to speaking to you again.
Glad to have you back on. It's been a while. Peter, I want to start off with an article I read from the IMF. It was titled Harnessing Gov Tech or Government Tech to Tax Smarter and Spend Smarter. Digitalization done right can equip governments to improve revenue collection and spending efficiency. Peter, just hearing that title, what comes to mind? Because, I mean, even in this title alone, it talked about tech, but it held no responsibility to governments or politicians.
It's an old saying here in the U.S. I don't know if it ever went around the world, but Ronald Reagan coined it. He used to say, "The worst thing you want to hear is a knock at your door and open and hear a guy say, I'm here from the government, and I'm here to help you." So the these things are just more and more control taking away from citizens. Really, also a way that they believe, and in some senses, I guess they're correct, to stymie illegal actions or people who are not living up and reporting. But it's a sense of control that and dictation to really take away private liberties and access to basically say that if you don't conform to what we think, it's going to be very, very hard to operate in our world. And that's the biggest fear I have, that this is truly the people that talk about one world systems and one world order. We're certainly marching towards it, not away from it.
Yeah, I completely agree with that. I think it's pretty obvious to most people right now at this point. Whether we do something about it or not remains to be seen. But in that article, it also said that for governments to tax smarter, they need to connect to the some 2.7 billion people who are not connected to the internet. Governments can consider offering discounts or vouchers on subscription fees, internet subscription fees. Additionally, promoting digital literacy programs is essential to overcome reluctance among specific populations, particularly older individuals, to embrace new digital technologies. Peter, in your view, is this government is it government education for people, or is this perhaps some sort of maybe government coercion?
I think it's far more conversion. There's no doubt that in some incidents, we've seen it in our lifestyles that the internet can improve efficiencies. And it's certainly with artificial intelligence, that really opens a Pandora's box to a whole bunch of orders. But in a sense, this is also a way for them to get control over the black economy, the economy that operates away from the government system. And I don't mean just people that are purposely looking not to pay taxes, but really have a sense to really control and get their fair share, or what they think is their fair share of taxation from it. Look, all around the world, Patrick, uh, nowhere worse than in America. Government spending and government debt is out of control. And there's only two ways they can continue doing that. They have to cut services in order to lower, hopefully, operation costs and increase taxes. And this is a way that they feel that they can be more efficient and effective. And it also, in some sense, gives them a way to put into place what their philosophy of business and how we should live versus not a government that's built around the people, but the people built around a government is where it's heading.
Right. Yeah, I can see that also. Peter, you mentioned two interesting points. Governments either need to cut back on some things or they may have to tax on other things. But yet we don't really see politicians doing this. They'd rather take us more and more into debt.
Well, Patrick, here in the United States, if you run a business and you have an unfunded liability, the law requires you to fund it. The United States a long time ago, when they got rid of the gold standard, eliminated that issue. It's not a coincidence that we started to have major debt and deficits after we went off the gold standard, where we can just allow governments to freely print money at their will. And of course, now the biggest concerns I have is, and it's something I know you've talked with other people and we've talked about it for a while, but it's really grown acute, is the ability to service that debt. It's no longer a question, are we ever going to pay our debt off? We're not. The United States right now is at $33 trillion. And Patrick, I started in the Wall Street 40 years ago. And if you took a time tunnel and took me back and say, hey, Pete, I actually meet you 40 years from now, but I come here to tell you that 40 years from now, you and I are going to have a conversation, and I'm going to tell you that the United States government has 33 trillion. So we didn't have with T's. Everything was in B's back then. 33 trillion heading to 50 trillion. The Congressional Budget Office here in the United States has clearly demonstrated that. And by the way, your best year you ever had in tax revenues was your last year. You took in 5 trillion, a little over 5 trillion revenue. So if we have 50 trillion in actual debt within 10 years or less, and just put a 5% interest rate on that, Patrick, which people realize now 5% interest isn't that far away. We're going to talk about 2.5 trillion in interest expense, or half of everything the United States government takes in to service interest. That makes everything else a non-starter, Patrick. This country cannot sustain itself economically by paying 50% of what it takes in just for interest. So is it 1 year from now or 8 years from now? But within most of our lifespans, we're going to face an economic crisis unlike anything that's ever seen in mankind here in the United States.
Right. We'll touch on that in a bit. But currently, Peter, I mean, governments they want more of our money, and they can't even balance their own budget, and I'll refer back to the recent debt ceiling fiasco. A stopgap funding bill was approved to avert government shutdowns, granting another 45 days of kicking the can down the road to negotiate some sort of spending plan and keeping the government running until November 17th. Peter, at this point, is the debt ceiling, is it a joke already at this point?
Well, if you said to your kids, stop it, stop doing that, and they keep doing it, and you're up to your 70th time telling them, stop it, don't do it, and they keep doing it, chances are they're going to keep doing it, Patrick. And that's been the problem with the debt ceiling. It's always eventually overtaken, it's raising. And realistically, that's the argument for the Republican led revolt against the House Speaker that removed the House Speaker yesterday, claiming that we can't continue to do this. Now, whether this group lives up to this or not is another question, but we can't keep pushing this. We have this crisis that you and I are addressing here, and we have to get our deficit spending in order. We at least have to start balancing our budget going forward. We can't spend more than we take in. And that doesn't mean we're going to ever be able to pay down that other debt. But then there's another crisis here in the United States. The debt isn't just limited to the government, Patrick. We have very high consumer debt levels where consumers are being really hamstrung and their ability to service and grow based on wages that continue to be lower than inflation. And then, of course, we have corporate debt. And then our other big crisis, it's not as bad as the debt crisis, Patrick, but I'm telling you, America is going to have an acute issue, and that's our retirement crisis. We have two-thirds of our workers working paycheck to paycheck. Retirement, as Wall Street likes to sell it, live in this beautiful place, play golf, swim, and live out the rest of your natural life and enjoyment. That's a fantasy for most. It's never going to be achievable. And yet, those people are going to also require services and assistance because it's just not as easy to do things at 75 as it was at 25. So I find it very hard when I look around and I see economics out of control, social lifestyles out of control. With destroying what mankind lived off. I mean, we said man used to be man, woman used to be woman. Now we're dictating and telling little children that they could do this if they don't think they're one way or another. And then the political aspect, we now have two parties that not only can't go in a room together, Patrick, but within their own parties now can't look at each other face to face. That's paralysis, in my view. That's a ticket for just huge problems to continue coming down the road.
If you're enjoying this interview with Peter Grandich and I, please subscribe to our YouTube channel. And if you recognize the fragility of our global financial system, please visit our website, www.silverbullion.com.sg, where we offer products and services to help you truly secure your wealth. Right? I heard you use that word, political paralysis, but Peter, it kind of it really starts to make us think. When we hear reports of older people who are basically having to go back to work, where we hear people having to really use credit cards and take on credit, take on more debt. I mean, how how much longer can you see this going on before something really breaks?
Well, it's starting to break right, Patrick. You bring up some very good points. First of all, let's address that polls now show that people from 55 and over, especially 65 and over, they have more fear of running out of money while they're still living than actually passing away. I mean, I just think I can't imagine what that must be like to be feeling that way. Second, we now have people who, like you said, two-thirds are working paycheck to paycheck, and of that group, almost 40% are using credit cards just to pay for necessities, meaning food, clothing, shelter. And of course, that bill gets run up. It's unsustainable. It's grown into that acute stage now. And I think that's one of the reasons, Patrick, that people have started to really take a second look and say, listen, whether we have an economic slowdown or not, interest rates have to go higher no matter what, because money's going to be that much more difficult to come by and cause all sorts of liquidity issues. So it's just it's unfortunately a near perfect storm of social, political, and economic woes that I think is the worst ever in America's history, including now even our Civil War, that where really the nation was terribly divided. I don't think we're far away in terms of political division, uh, as people look at. And there's a great economic divide, Patrick, and it's around the world too. I don't want to say that it's just the United States, but there's a small, very well worth acute society in America that lives above this, but more and more people fall to the other end than make it into that special area, and that's unsustainable too.
Right. Peter, you mentioned those rate hikes, and recently we saw the Fed, Jerome Powell, take a pause with raising these the rates. Peter, what does that tell you? Where the Fed has felt a necessity to take a pause, and on the other hand, you're seeing where these rates are really still going to have to rise.
Well, they're in a catch 22, and it's again, uh, I coined the most of the people, Patrick, on the financial service industry work in what I call the "don't worry, be happy" crowd atmosphere. You can throw them off the top of our Empire State Building and all the way down. They'll all tell you the same thing, Patrick. Hey, so far so good. The problem is that we now have a Fed that's really been misguided in its assessments for quite a few years. First, it got overdone on the loose side, the monetary looseness. Of course, COVID really created that monster by trillions of dollars being printed to supposedly save the nation. Which part of the reason it had to do that is because we go back to what we pointed out before: two-thirds of the country's working paycheck to paycheck. Within 30 days, most people would have been in serious problems. It also went out and bailed out zombie companies, we call them, companies that were not in good shape, but got a lot of cheap money. And those people are back at the spigot now. They got to go back and refinance, and they don't have that cheap open spigot anymore. That's going to be a problem on the corporate debt side here. But I think the other thing that you have to look at is that the Federal Reserve uh, may be perceived as thinking in our best interest, but its really job is to protect the banking system, and the banking system is greatly influenced by a certain amount of powerful people. And it's always going to err on the side for those powerful people, not for the average working class person. And so we have a real quagmire here now, Patrick. So much of our banks who went out and invested in US paper on the bond market side, not risking in equities, all those holdings now are at a loss. I mean, we're looking at unprecedented third year potential losses for bonds. And so all these banks that are struggling because we're slowing down, they got a lot of real estate exposure, are also holding paper that pays interest of 1, 2, 3% in a 4, 5, and 6% environment. They're all at substantial losses. And God forbid if people ever started to think, wow, the whole banks are bad, and started pulling money out, and these banks have to sell those items in order to raise to pay their depositors. That's the big thing that's gone away from the media and people's attention, but really hasn't gone away technically from what we saw a year or so ago when some of the big banks that were caught with their pants down, and we saw what happened there. So that could be one of the negative surprises if interest rates keep ticking up, that we could see another bank fiasco here in the not too distant future. And can I just interject here one thing, Patrick, for people that may not know me? I don't sell or benefit from any of this happening. That I don't have dry food. I don't sell guns. Land in the woods. It hurts my general financial planning business, which I still live off and all. But these things are unprecedented. That's what annoys me about mainstream financial media here in the U.S. If you turn on our so-called major networks, this conversation, you and I would have been stopped minutes ago. You and I would have been next to leave and never come back. So I just want to make sure people understand that I'm not trying to say this because I'm somehow going to benefit from it. I'm actually going to suffer from it just like everybody else will.
Yeah, I understand. I thank you for saying that, but still, the situation is it's getting pretty severe here. I mean, you mentioned bonds, and I believe bond yields. They've been, of course, they try to move with these rate hikes. They continue to go up, and U.S. Treasury yields. I think they're at about a 16-year high. And we do see a global bond route, the benchmark 10-year Treasury yield. I think it's at its highest since 2007. I was going to ask you, I was going to ask you what's your opinion on the bond markets currently, but I think maybe we'll swing that around to who really is going to take on the U.S. debt at this point.
Well, I think the other thing that needs to be spoken about, I don't want to take away from where you may want to go, but I think what America also has greatly underestimated is the move away by the world in general, away from the United States in all sorts of forms, leadership, monetary, military, all that. And the BRIC nation is the, what I have said since it's really become pronounced. And before we had this most recent meeting, I said the key will be is if you tell me Saudi Arabia steps up and decides to publicly announce that not only they wish to join the BRIC, but will actually contemplate and be willing to move away from the petrodollar and sell its biggest asset outside of US dollars. That's the beginning of the end of the US dollar, and that's the beginning. And people go, well, why is the dollar going up? No, well, right now it's caught up in the interest rate environment. All, but that was such a major change where I say this, I feel still in 1 to 3 years, what is happening with the BRIC nations will rival the input that the change in the Industrial Revolution had for the United States, only this time in the opposite direction. It's a negative. America is going to be outside looking in at a time when it can ill afford to be outside.
Right. Definitely does look to be going that way. And It's interesting because the things that the BRICS nations that they're trying to achieve, they look to be the same thing that John F. Kennedy was trying to achieve, where he wanted to build up uh, developing countries using the engineers and maybe the military to help build schools and roads and bridges and all of these things. And we went away from it, and here we have the BRICS picking up on it and moving forward with it. And like you said, I think the U.S. is definitely losing influence throughout the world. Um, and that includes the dollar. We're seeing de-dollarization. I mean, Peter, in your view, I mean, really, what happens when the world really says, except for maybe developing countries, that we really don't want the dollar anymore?
Well, Patrick, it's begun to say that because the percentage of dollar ownership continues to decline in the world. Now, that's over several years, but it's definitely going in the wrong direction if you're looking at the U.S. And I just think the BRIC nations are speeding up that process. And it listen, I as an American, uh, like sometimes to say, I'm kind of tired of us having to go all around the world and try to think we know what's right for everybody else, and we spend all this money here when we really have an unbelievable crisis that you and I haven't even touched on here, and that is we don't have effectively borders anymore. And we're not the only one. Europe is facing that same issue and so forth and so on. And I understand for you, so people understand that there's no prejudices. I understand why these people are coming here because what they're leaving and what they're able to just leave and get here, I would want to do the same thing if I knew that was available. But unfortunately, is you just can't have an open door. There has to be some sort of systematic way and a way of building that versus just overrunning countries, which is happening not just in the United States, but in other areas of the world. And so right now it's organized chaos. Right now people get up and they still think they can operate today and they turn on the news and they see this, but somehow it's over there. Well, it's not. Here in the United States, the number one growth industry, Patrick, is crime. I mean, it's absurd. If when I was a young man, Patrick, if I even mentioned to my father that a few of our friends are thinking of going down to the local candy store and taking a few of those candies from that guy without paying it, first of all, my father would introduce his best friend to me, his belt, and because of that, we would never go and do that. Now it's done without total disrespect, and we even had a law passed in California where if you tried to stop that, those people breaking supposedly law, you're the person that's in trouble, not the person breaking the law. So we're having a breakdown in society as well on the simple and most important things. You know, people will tell you, especially people that live in big cities, crime or the fear of crime is a major issue, and it's really deteriorated here. And ironically, now, when just a few years ago, there was a certain segment of the political world that was calling for what we call defund the police or lower the police's ability to police. And now those very same places and cities are being absolutely overrun. And I find it kind of ironic, sad, but ironic that those very people a few years ago who were saying defund the police are now begging for the police. So it's again, like I said, it's very hard here, Patrick, to find positivities in America now, socially, politically, economically. I really believe this "don't worry, be happy" crowd. It had blinders on purpose, or don't really have an understanding on how society is deteriorating and what that's going to mean to them economically, socially, and politically.
Yeah, I can tell you here in Asia, here in Singapore, we're seeing this. We're seeing it coming out all over the news, daily type of a thing, and we're really scratching our heads, wondering, really what's going on and how really did it get there. I'll move on a bit. There was an article also recently in Bloomberg titled "Something Will Break," with yields grinding higher, the bond yields grinding higher. David Lebovitz of J.P. Morgan Asset Management was quoted as saying, "If rates continue to rise the way they've been rising, there will be a financial accident. Something will break, and that will get the Fed moving in the other direction." Peter, what are just one or two of these financial accidents on the table JP Morgan is warning us of? I mean, I know we touched on bonds, I know we touched on petrodollar de-dollarization, but in your view, what are two of the biggest things to watch for?
Well, the one again, we talked about, but I think we have to bring it up again, and that is we're looking at a banking system now that basically's assets are underwater and they have paper losses. And people always have to remember these banks, they don't have like the government a bunch of cash sitting somewhere to pay Social Security. Well, they don't have a bunch of cash sitting somewhere to pay their depositors. And so that's the first fear that keeps rising. I think the other thing that people have come concerned about here is that we continue to see government fudging of numbers. For instance, it finally came out something that I started to talk about, and I was not alone. There were a lot of people speaking about it, that we were getting these employment numbers that just didn't make sense. They didn't match up to what was really happening in the economy. And sure enough, last month, a Bureau of Labor Statistics, the BLS, which I always like to joke, they should just take the L out and call it BS. But the bottom line is they redid the numbers much, much lower. And I think we're going to continue to see that. In fact, as you and I speak a couple of days before our monthly employment number, I suspect that we're going to get more of a negative surprise when the negative comes out. And that'll at least give the ability for the bond market to rally or at least have a counter trend rally. But I want to go back to something we said about earlier. There's trends in places because people realize how much debt is going to have to be serviced. And whether the economy slows down or not, interest rates can remain constant. Now, they may not keep rising at a rate, and they may even stop rising. But this belief that, remember, a year and a half ago, the Don't Worry Be Happy crowd already said by this time in 2023, the Fed was going to have reversed. They're going to be printing money again. They're going to ease. And that's why a year and a half ago, you should be buying bonds and stocks. Well, that proved wrong. And I don't think the Fed is going to be in a position where they can ease, or what we knew what easing was for decades, unless there's a tremendous financial crisis, something like what COVID hitting and all. So I think the mistake is to believe that somehow interest rates are going to somehow go a lot lower after they stop rising. They may not keep rising, but they're not going to go dramatically lower. And that's where we have problems. We have a lot of real estate that's coming due, money owed on real estate at a time when the office and shopping center part of that commercial real estate business is really declining. We're seeing a lot of office space not being occupied, shopping centers closing, et cetera, et cetera. And those banks have to restructure those loans that are outstanding, and they themselves are tightening. So, again, interest rates may begin to peak, which they won't rise a lot, but to think that they're going to reverse and go backwards and that somehow, and this is real important, Patrick, we have an entire generation of investors and professional advisors who grew up on a one-way street. The Fed eases, all this money's created, stocks always go up, the Fed put always comes in, and that's all they know. It would be as if we learned how to drive on nothing but one-way streets, and suddenly now there's two-way traffic and roundabouts, traffic circles. That's very hard for both professionals and investors to grow accustomed to. That's why I believe markets are going to underperform compared to the last several decades for several years to come.
Peter, you think we're heading to a period of let's say stagflation, maybe something we saw back in the 70s or 80s?
Yeah, not at the high levels where inflation's 15 and interest rates are 12, but where interest rates are 4, 5, and 6, and inflation is 5, 6, and 7 or 8. Uh, you know, this Biden economics, we've just drawn down to where our strategic oil supply is down to one of its lowest levels ever. We only have 17 days. The whole philosophy of that was to have many months of oil reserve in case we never had an embargo again and all that. And what did this president do in order for just short-term political gains? He sold or allowed this oil to be sold into the market. Hopefully that'll bring gas prices and the public would like him and all that type of stuff. Stopped all sorts of any ability for a major oil company. I'm a major oil company. I'm like the most hated guy in the world. Why do I want to go spend a few $1 billion looking for a commodity that you say in 5 or 10 years you want completely wiped off, that we shouldn't even have fossil fuels anymore? We just set ourselves up for another energy crisis. And we got away with one last year, Patrick. The very warm winter, particularly in Europe, saved the real energy crisis there, for the natural gas and all. And we may not get that same break this year. So throw on everything else that we talked about, throw on a potential energy crisis again. Like I said, that's why I have this philosophy, Patrick, and people think it's just a sarcastic way, but it's serious. I'd rather be a live chicken than a dead duck.
Gotta I gotta remember that one. But yeah, the Strategic Petroleum Reserve. I've looked at the numbers as well. I think the U.S. we use about 20 million barrels per day, and if there's no other source of oil or petroleum, and it's really only that SPR, as you said, there's only about 17, 18 days left in there. So that's something to watch as well. Um, Peter, I got to get to the historical inflation fighter, the historic money, the historic trusted sound money, and that being gold and silver. Why, in your opinion, are we not seeing the needle move up with gold and silver prices in this inflationary environment, this uncertain environment?
So I have the Monday morning quarterback, because if you interviewed me 6 or 12 months ago, I would have told you, no, we're not going to be back at low 1800s on gold and silver under 20, dollars possibly, and that type of stuff. The Monday morning quarterback analysis is, wow, interest rates went a lot higher than we thought right away. The dollar, even though we have all the reasons that you and I just discussed, fundamentally, it's terminally ill, rallied because of that. And the natural tendency for people was to sell gold and silver in that environment, because supposedly that's what you're supposed to do. But I'm singing to the choir here. But whether I was singing to you or I was on CNBC right now, I'd say the same thing. The physical bullion market is changing for the better, while the paper market, particularly one that has been running what I've nicknamed, and I'm not the only one, I call our COMEX the Crimex, that may still have an influence, but it's deteriorating and it doesn't have the long term effect that it once had. Just before you and I sat down to record this, someone had noted what some statistics that have been happening in the COMEX in recent weeks that help explain, I think, why we had this most recent decline. And yes, there is manipulation. And yes, 10 or 15 years ago, when I and others that spoke at conferences all around the world, we were called crazies when we said people manipulate the gold and silver market. But most recently, we saw some people actually go to jail for doing it. So we weren't that crazy to begin with. Unfortunately, the ability to manipulate the paper market disguises but helps people who play the short side of the paper market to recover and profit from it. But the physical market is growing stronger. Patrick, there's no question now that your part of the world is taking more control of the physical metals markets. And that's a good thing, because people in your area of the world pretty well understand the value of something that's worked for a few thousand years, physical metals. We're here in the United States, everything is paper and debt, and it's not our second nature to look at physicality. And look at my neighbors to the north, who at one time, a great natural resource country. Years ago, they liquidated all their government holdings of gold, so they don't have an incentive. And I think it's one other important. It's not a cop out, Patrick, but it is true. I think it's important for people to understand, at least here in the United States, the financial service industry treats gold and silver like kryptonite. They have no incentive or desire to see their clients own it for a couple of reasons. One, it flies directly in the face of what they make their living off of. You're not going to have $2,500 gold and a 50,000 Dow. It's just not going to, those two things are not going to happen in our lifetime. And since they really have bet their lungs on a 50,000 Dow, they're not going to promote or suggest anything that goes against it. But it's very difficult for the American investor when I sit them in my planning group and say, listen, I want you to own some physical gold and silver, but I also want you to hope it doesn't go up. And Patrick, they almost all say the same thing literally. Excuse me, Mr. Grandich. You want me to put money into something that you hope doesn't go up? That's un-American. And I turn to them and I go, listen, the reason I say that is because if it does go up, what you probably own a lot of went down. So you buy home insurance, you buy car insurance, you buy health insurance. I want you to buy money insurance, and that insurance is sold at the gold and silver corner. So for no other reason, and I know that's your business, and I'm not saying it because it's your business, it's because what I believe. You need to own it minimally just as you own health, car, and medical insurance. Now, I also believe that there's an opportunity for capital appreciation in it. That if you said to me, you took my one great prized possession, my 31-year-old daughter, Patrick, I'm taking her over to Singapore. 5 years from now, this is the only way you get to see it. Tell me what I made more money in, stocks, bonds, or gold. From today's prices, without question, at the risk of losing my daughter, it would be gold. Because if nothing else, it will not perform as bad as those other two. And I think the key to success is not how much money you make, but how much you don't lose, which is going to separate you from the winners versus losers.
Right, Peter. That's the best I've heard anyone word it in a long while, and I think more and more what we're seeing is just like you said, you need to protect whatever it is that you have. So that's a great point there, Peter. I appreciate that. Peter Grandich, before we wrap up, can you tell us about your insight services and how people can follow you?
Well, first, I'd like to say and tell you this because you have no idea I was going to say this. The main reason I was willing to come back on your show is because I know you're a man of faith. And I believe faith now, without it, there's no way we can going to be able to live through what is taking place in this world. Evil is on a roll, and without faith, it's going to be I personally impossible. So that would be the most important thing I can say. I'm in the golden years. I told you before, I'm looking for the guy that told me to wait for these years because I haven't found any real gold in them yet. But I spend a lot of time on Twitter now. The type of discussion that you and I had are the type of discussions I feel that are needed. I think there needs to be an alternative to the general financial service industry stuff that's out there. And so I have a Twitter page where I spend a lot of time. I also have a YouTube channel. And if they just punch in my name, Peter Grandich, they can find all of them online somewheres.
Right. Yeah, that is true. I mean, it was years ago that when I started looking into gold and silver, that was when I found a lot of truth, including faith. So yeah, absolutely true there. Peter Grandich, I'd like to thank you for your time, your insights. It's a very important time in all our lives in so many ways, and I do hope that each of us takes the time to discern the messages that we all hear and let no man deceive us.
Amen. Thank you for having me.
That was Peter Grandich sharing his views on the economy and gold. To see Peter's services, please visit his website, petergrandich.com. If you like this video, please subscribe, share, and give it a thumbs up. All are greatly appreciated. Audio only versions of this interview can be found on iTunes and Spotify.